Mike Sintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this early Friday afternoon on December 5th. I do have a little bit of a winter cold. It's winter up here in Massachusetts, about 20 degrees today. So if I do have a frog in my throat or the occasional cough, I apologize for that. But getting into the market, the action since the kind of pre-Thanksgiving low, we had the late October to sort of mid-November, pretty sharp correction. Major indexes, decent correction. A lot of growth stocks and high flyers really got hit. The action since then has been very good. It's been encouraging. Obviously, it's been up. We've seen some good things from breadth. We've seen a lot of good signs. The way I look at it, though, it's been good, encouraging, just not quite enough to say like, hey, we're really going higher. We have the major indexes kind of up, but sort of battling with their old highs and still sort of in the trading ranges they've been in for a while. Growth indexes improving, but lagging a little bit and not quite in intermediate term uptrends. The interplay between growth and defensive stocks. Again, it's improved, but not, really like that. I'd say the broad market has done better. We have seen some new leadership emerge. We've seen some cyclicals and stuff like that, but also some other things like retail. Obviously, medicals have been strong. So I'm encouraged. I'm optimistic. It's a bull market overall. I think in my mind, it's sort of like, hey, are we done here consolidating and we're just going to go up again with some fresh leadership? Or are there going to be another one or two sort of reverberations, easy for me to say, that where some things get hit and there's sharp rotation or money sloshes back and forth, so on and so forth, okay? In Cabot Growth Investors model portfolio, we got very heavy in cash just because growth stocks weren't working. We're about 2/3 in cash. We're still 55%. I'd like to be a decent amount lower than that, and I have a pretty big watch list, both official watch list and what I call the back burner watch list, things that maybe I'd be interested in if they set up in 2 or 3 weeks sort of thing. So I have a lot of names I'm watching, really a lot. But let's just see what happens. If we can kind of power ahead, not even the market, but just more and more stocks participate, break out, some of the strong ones pull back calmly. I think there could be a lot of opportunities here. But if we do kind of come in next week and sell off, big time 3 straight days, or we sell off after the Fed, we could have some sort of dip, correction, whatever you want to call it. So let's just see how it plays out. Right now, optimistic, but just want to see a little bit more action from the market and individual stocks, okay? Let's hop on the charts as usual. I'm using a program called Market Surge, excuse me. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So here's kind of the NASDAQ, sort of what I'm saying. It has bounced back. It had this pretty tough correction here, a couple thousand points. It's bounced back most of the way, which is a good thing. If it couldn't bounce at all, that would generally be not as good. So it's good. It's back above the moving averages. To me, it's just kind of a little bit in no man's land. I wouldn't say there's a lot of power there, but still, it's more positive than not, but not really pulling you in. S&P 500 kind of up here, small caps. Again, beautiful snapback, acting well. Like, I'm optimistic. When I look at this chart, I'm like, I'm optimistic. But if you come in next week and there's like 1 or 2 big down days and you're back here, you're like, we're back in the soup. You'd like to see it, actually stretch higher and show some power. Mid caps, trying to do the same thing here. New York Composite, just running through the major indexes. So it's certainly more good than bad. I'm not saying there's, the bulls have all this stuff to prove before I would be buying. No, we did some buying this week. It's just more, we're kind of right back up to the highs. We've had the recovery. Some of the fears from obviously 2 or 3 weeks ago have dissipated. It's kind of like, okay, let's see what happens here going forward the next week or two, okay? I would say, so one thing I'm a growth guy, but thing I'm keying off of, so, some of these growth funds and indexes. So this is the ARK fund. Obviously had a great run, but just notice how it kind of respected, the 50-day lines for the most part. It just acted properly all the way in the way up. It was either going up or sort of pulling back normally. But then, we broke the 50-day line here, had a nasty drop. And again, we've rebounded pretty nicely here. But just using the way we look at the intermediate term trends, we'd like to see the stock, or in this case, the fund, hit sort of be higher than it was 5 weeks ago. Let's put it that way, which it's not. 5 weeks ago was up here. So, do we pull back here? Do we just kind of plow higher? We'll see how it goes. But so far, it's up, it's encouraging. It's not this pullback wasn't the end of the world given the prior run, right? But, I can't say the intermediate term trend is really up, okay? FFTY, this is sort of a it's called the IBD 50 fund basically, but it's a little bit different than that index, but still you can see very, very sharp correction and actually a pretty modest bounce here. The momentum fund, MTUM, better, but just kind of like the major indexes. The chart is kind of squished here for some reason, but just kind of back. It's good, but you're just kind of back into all this resistance, and it's not really higher than it was 5 weeks ago. So it's just kind of it's more neutral than positive, I guess is kind of what I'm saying. So it's definitely not negative, but you'd like to see a little bit more. At least I would. IPO fund has been kind of a laggard. Again, popping higher, nice action. Maybe the correction's over, but you'd kind of like to see this 25-day green moving average turn up. Okay, so good, but not exactly what we're looking for. Defensive stocks are still sort of trending higher, although I will say they have been pulling back. This is XLP. This is SPLV, which is the low volatility index. It's the 100 lowest volatility stocks in the S&P 500, which includes a lot of utility. It's a little utility heavy, but it's kind of utility / consumer staples kind of thing. And you can see this has come off too. Okay, so there's not... Again, there's certainly more good than bad. I'm kind of coming on here saying, geez, I want to see more. And then as I look at the charts, I'm like, well, this looks good. It's just, if you're going to go put a bunch of money to work, you don't want to do that. And then all of a sudden, some news hits or the Fed or whatever, or there's rotation, all of a sudden you're down big on the position. So just like to see a little bit more to say like, hey, things are doing a little bit better. The other thing I would say is that while the defensive stocks are still... they're not leading totally, especially during this bounce. Not like they're soaring during this bounce. I would say things like, so here's the Dow Industrials. This is sort of just as strong, if not stronger. It's definitely stronger than the NASDAQ, which is a little bit of like a short term. And we are seeing some things which can be opportunities. I'm going to mention some stocks, but just some commodity names starting to perk up. This is OIH, which is oil services. You can see it kind of started to get going here in October, consolidated, now shooting higher. This is oil producers, still kind of in a resistance range, but clearly, acting well here in recent days. And just like this would be SCC, this is a stock, but I don't have a copper ETF. I mean, I guess email me one if you want. But this is just some of the copper names, some of these sorts of names. Got hit, stalled out for a bit, got hit during the correction, but have been some of the first to kind of bounce back to their old highs or whatever. So some more action, sort of the commodity cyclical sort of areas, which isn't bearish. It's just, it's not, I wouldn't say it's as bullish as, if some growth was leading the way. So overall, it's like I said, it's good. I'm encouraged. I'm not going to throw stones at it and say, we're only going to buy if everything breaks out to the upside. That's not how, I wouldn't say that's a successful strategy in most cases. At the same time right here, especially with those growth funds, not to key too much off the ARK fund, but you'd kind of like to see this 25-day line turn up. So that could just be from continued strength, or maybe we do kind of pull back a little bit and then go, really thrust higher from there. So we'll see how it plays out. So far, so good, but we'd just like to see a little bit more. I'd say the best news is there's breadth, not just like advanced decline lines, but as opposed to like, hey, there's this AI stocks and a few random news, some news-driven things happening over here and over there. We are starting to see names in a variety of groups either act well or set up, or both. Okay, so we've mentioned like in medicals. There's a bunch of them. They're getting kind of hit. Some of them are getting kind of hit today, so we'll see. But this is Garden Health, GH. I've mentioned it, kind of pulling back here to the 25-day line. GeneDx, WGS. It was a penny stock, not a penny stock, but a very low price stock, had a huge run. Hacked around wildly for months and months. But it's kind of come more under control, obviously, breaking out to new highs. And again, you kind of have a controlled pullback in here, okay? In terms of like there's the AI, call it infrastructure or whatever. This is WULF. In fact, I mentioned this in this week's Wealth Daily. The good news with this whole, nobody wants a tough decline. We like the rebound, of course, but it does let you kind of separate some of the wheat from the chaff. So this is one of these high performance computing stocks. This is WULF, WULF. You can see it's been, who knows, maybe this is topping out. This is a big top, but so far it's really snapped back well, especially when you compare it to like an IREN or IRIN. This is one of these huge winners, and it corrected, and it just hasn't really even gotten off its knees. Doesn't mean this can't get off its knees, but generally speaking, if you're going to make 10 trades, coming out of some sort of tough pullback, especially for growth stocks, you want to go with things that are showing, a higher degree of relative strength, So maybe some of these things have been pulling back. Maybe the market digests a little bit more, and maybe you get some breakouts going forward on those. In terms of sort of bigger names, this is I keep doing that, Broadcom, AVGO, just change the symbol. But this one's been acting well. You can see it's basically been respecting the 50-day line. Yes, it dipped below it during the correction, but not that much above the prior low. Really spiked recently. Of course, there's some, Google versus OpenAI stuff going on. Google's now perceived as the leader, so infrastructure stocks sort of more tied to Google are doing well. But either way, AVGO looks pretty good, especially, by the way, compared to NVIDIA, which, again, I'm not negative on. I'm just saying it really hasn't done anything here since August, whereas AVGO clearly in an uptrend. CIEN is kind of interesting. This one is on my watch list. And, if it didn't have earnings, this has earnings on the 11th, so next Thursday, I think it is. You have this initial base, it got hit during the crash, obviously, came back, broke out, had, I think it's 10 weeks up in a row, a lot of it on big volume. And since then, it's been shaking and baking, don't get me wrong, but it's been 4 weeks consolidation, including the first test of the 10-week line. Now, earnings come out, the stock could dive 20%, nobody knows. But generally speaking, just textbook, which, the market doesn't follow textbooks, but generally speaking, you have a big breakout in a strong sector and it's a leader and it's liquid and it's got the numbers, so on and so forth. The first test of the 10-week line should find support, which this one did, and it should lead to higher prices. So we'll see what happens next week. No predictions, but it is one I'm watching, and if it can kind of get through next week, even if it got hit a little bit and then kind of came back, it would be one where you'd say, this looks like sort of a normal consolidation after the big run. Okay, so just something to watch. Some software names. The tricky part with some of these, I might write about it next week, is some of them are kind of off the bottom, which isn't ideal, but they've just been lagging. Pretty much everything but AI and growth world's been lagging for really since May or June. But anyway, this is MDB. It's a little bit lumpy. You can see the earnings moves, just even going back when it was in trouble. The thing makes a ton of big earnings moves, so a lot of times it will gap and then not do too much for a few weeks. So just something to keep in mind. But MDB certainly, acts well. It shook us out of top 10 on this pullback, unfortunately. But, who knew? The market found support, and then the stock did gap up on earnings here and is holding pretty well the last few days. Like I said, some of them are off the bottom. This is Samsara, which was an old favorite fundamentally of mine. We owned it once, a small position. There's still resistance here, but again, you just kind of have this long bottoming area, and then you have this big earnings reaction, at least as I record this today, around a little after 1 o'clock Eastern time. Okay, so you're seeing some of this action now. There's some other software names that look pretty good. Cyclicals, this is oils, this is Valaris, this is a driller, VAL. I think I might have mentioned it on a prior video. A little bit more of a stair-step player, obviously. I don't think you're going to get, unless oil goes to $100, I don't think you're going to get straight up moves in these stocks, but, nice breakout on earnings, right? And then it chops sideways with the market, but really doesn't do anything wrong. And now it's sort of, stepping higher again. So that looks good. Weatherford is another sort of, there's old overhead here. Again, all these things obviously went through the ringer for years. This is WFRD. But you can see it's been pretty, I don't want to say a change character, but just pretty persistent, almost the opposite of the downtrend. It's kind of interesting. It's a very persistent mover. And right now it's moving persistently higher, testing its old highs. And just, again, this is sort of kind of like in the off the bottom crowd. But this is Diamondback Energy, FANG. It's one of the big, growth. Let's see if we can get the chart right here. One of the big sort of well-established, but also, big free cash flow, all that stuff in the oil exploration group. FANG is the symbol, like FANG. And you can just see it's been just marching sideways really since the bottom, But I can tell you that just if you run through, I'm not going to run through a million of them, but if you run through like even, like here's EOG, which is another big, well-situated, not like Chevron, but a good explorer. You can see it's been, sort of well off its highs from a few weeks ago, whereas FANG is actually coming out here to new highs. So just something to watch. I'm not a big oil guy myself, but they have been out of favor for a few years, and it wouldn't surprise me if some of them kicked in. Elsewhere in sort of cyclical, or not cyclicalville, but sort of not your traditional growth sectors. This is Viking, which is the river cruise ship. They are getting into ocean cruise ships too. Recent IPO, nice big base here. Nice run, respectable run. Built this sort of, 3-month consolidation. Now you've seen some breakout on earnings on the daily chart right here. And you can just see a nice consolidation. So that looks pretty good. I would say the group is not as great, but, and even like Delta Airlines, I know you're tuning into the video like, it's airlines and cruise stocks and oil stocks. But that's a lot of what's working so far in this rally. I would guess if the market really kicks into gear, it's not just going to be only airlines or anything like that. But kind of a nice little double bottom base here. Breakout a few days ago and handling itself well. Obviously, it's going to be news driven with oil prices and stuff like that. But anyway, some of the airlines look better. And then back on sort of the growth area, we are seeing, which this excites me, we are seeing some retail names perk up that have some good growth stories. We are seeing some, just to mention, like this is Abercrombie and Fitch, ANF. It had a huge run back here. You can see it kind of collapsed. It's been out of favor for a while, but it just had a huge earnings gap. These are kind of what I call sort of stodgy retail. Like there's not really a lot of growth there. It's more like, hey, things aren't as bad as we thought, and earnings are, the stock is cheap, that sort of thing. And those can be good opportunities too. The things I like are more the growth-oriented ones. So this is like Boot Barn, which you can see has been kind of just, it really hasn't done anything wrong. It's just been grinding higher while retail has been, I don't want to say out of favor, but kind of out of favor. And now it's sort of testing. It's got that look to it too. It's sort of testing, round number resistance in the 200 area, give or take. That's something to keep an eye on. Urban Outfitters, which was, gapped on earnings back here, but like so many stocks that weren't AI names, it gapped in like May, new highs. Wow, this looks great. And then it really didn't do anything. But now it's, after a tough correction, gapped up on earnings again. So it's back up to the top here. It's like the market. Looks good. It's encouraging. Reacted well to earnings, but it's still kind of in that range. So, can some of these things break out? And then again, with the off the bottom idea, this is On Holding, which was, the On running shoes and whatnot. Great story, great numbers, affected by currencies because it's a Swiss company. But you can see it topped out, had a very tough correction, tariffs, the whole thing, but really reacted well to earnings. You can just see, just look at the volume here. Again, you're off the bottom. You're still really just nosing above the 200-day line here. So there's all sorts of resistance, but this very decisive volume on the daily and I think weekly, it's pretty, it's pretty interesting. I'm talking myself into it. But, and showing some follow through too, not just gapping for a day and then just falling back down, but gapping and a little bit of follow through. Obviously overhead here. It's not a perfect type of setup that I look for, but it's one of those things that's sort of, a little bit on the back burner, can it continue higher and set up here somewhere? And then one last name today I just want to mention again, sort of with that theme. This is Rubrik in the cybersecurity field. Again, it's back into some overhead. So these things, the reason I mention overhead, not to keep talking, going on a tangent, but it makes it more failure prone. There's probably some people that just held on to it. And if the stock starts to crap out again, then they want to get out too. There's people who are either get out even or get out on the bounce sort of thing. That said, it has had a pretty tough correction here, 100 down to 65, round numbers. Good volume today. We'll see how it closes, good numbers, so on and so forth. So you're seeing some of these things that are, relatively dead. I don't mean totally out of favor, but good stories, good numbers. They haven't participated. Now you're seeing some reactions. You're seeing the market obviously act better. You're seeing breadth improve. I think for my part, like I said before, just would like to see a little bit more either strength. Honestly, to me it's less about, it's about the funds and the indexes and stuff that I watch for sure. That's definitely one message. But it's also about just more stocks. Can we just get more stocks breaking out? New highs are much smaller than they were a few weeks ago, which is normal at this stage of a rally attempt. But you like to see that expand. You like to see some more growth things and some opportunities emerge. Okay, so far, like I said, encouraged. Put some money to work, extend your line, whatever analogy you want to use. But they'd just like to see it build day by day, week by week from here. Okay, that's all the time I have for today. As always, thanks for watching and listening. Be sure to come by again next week for another Cabot Weekly Review.